Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, July 14th, 2025. It's 12:52 p.m. Eastern Time as I'm starting the video, so we have about 3 hours left in the trading day. Very quiet day in the markets. We're in the summer doldrums, low volume. Markets aren't really doing much today. The S&P 500 is virtually flat. Here's what I'm going to do. I'm going to answer a few questions or give chart opinions. I'm going to go back. I think this is as far back as I need to go. I was going to click right here. I think I've already answered these. So we'll go back to Thursday. I left town, as I mentioned, Thursday afternoon. Was out Friday, so just catching up. Got a couple out to you this morning. We had a few the trade ideas trigger, but let me just start here. And I'm going to go over just a couple other things that I'm watching and give you some trade updates. So this is again the comments under the last post I made on Thursday. There's a video I posted after giving you the XRT trade idea right there with some targets, and then did a video covering the largest retail stocks. As I like to say, a sector or an index is simply a sum of its parts, or most commonly a market-weighted sum of its parts. In other words, usually the top components in most sectors and most indexes have the biggest impact. So I like to just look at those and get to help give an idea where the sector is going. So there's the link if you want to watch that. Somebody asked, crowdsource looks like a short, also PANW. Agreed. Let's look at those charts real quick. Let's start with CRWD. That's the first one. I like to look at multiple time frames. This is a daily chart. You can see here we have a series of consecutive divergent highs. It's really one divergent high, that's been building. And when you see long-standing divergence, this has been building for a year and a half now, since about the beginning, early 2024. Then I like to look at the weekly charts, which we will. We'll toggle over there. And again, there are no guarantees, but as I say, this is a big part of my trading. Much more often than not, divergent highs and divergent lows are followed by tradable trend reversals. Pretty simple stuff, right? You had a divergent high right here back in late 2021. That was followed by a 69% drop in this stock. That ended with a divergent low. I don't have the DL written there, but you can see my divergence lines down below. Positive, aka bullish divergence. That set up this rally here, which culminated with that divergent high right there. And that one, that was DH1 really, and that was a drop of 50%. So one of the takeaways, and reasons I like to do these videos and things that pass along, I have that thing I call the know your security rule. Different stocks, they all have their own. It's just like your children or friends and family. Everyone has their own personality and different traits. Stocks are the same way. And so a stock like this, you can see these are just run-of-the-mill corrective, if you will, moves. 70%, most people say that's the most vicious bear market you can imagine. That's just the nature of this beast right here, this particular stock, as is that 50% drop right there. And so the takeaway is, when you do identify a potential trend change coming, especially a significant bottom or top based on technical analysis, including but not limited to divergences, then it helps, at least it helps to me, to formulate what my price targets might be. And a lot of times I have targets that, especially if you're new to this site, some might think, oh, this guy's smoking crack. He's calling for a 200% or 100+% rally in this stock, or a 50% drop in this one. And that's, some of the trades that I list are longer term swing and trend trades like that. Others are more active, shorter term swing trades where I might only target 5-10% on a quick swing trade based off the intraday charts, like a 60-minute chart. So my point on this one is, it's a daily chart. This is divergence that's been building for a while. And you've had, with each divergent high, you've had a correction so far, except this one. And again, this is a culmination of 3 successive divergences that, again, you can see it here on the daily, and it shows even better on the weekly chart, result in a much larger divergent high. So the takeaway is, I would say this is an ideal. These are all my targets right here. This would have been, it was just brought up, or I just caught it today. I was out, of course, since Thursday afternoon. Absolutely, yes, an objective short. It was objective on that break of that bearish rising wedge right there. Right now, not so much, because this would have been my first target. It's coming up on now, 457. But a break of 457, which also comes in, if you see that yellow line there, it's the 50 period EMA, and it acts in the shorter term as support in an uptrend. It was support there, then it broke right here. You were below it, you got rejected, and then you took it back right here. So I like that. There's dual support levels. All the better when not one, but 2 or 3 support levels in close proximity are taken out. That increases the odds that a short trade will play out. So those are your levels. It's simple. Set a price alert, or if you aren't in front of the computer all day, you can set a sell stop order. Those are order that you don't own a position, but you put a sell stop. Some brokers will allow them, some might not. And that will automatically short the stock if it drops below 457. You might want to give it a few pennies under that. And then you can see my first target. You have the 200-day moving average. I'm going to add a target zone. Let's just sharpen my pencil here. Why did I put that in there? I didn't have it before. The other levels I already had marked up. I already had this chart marked up. This is the first target, or second target zone, you call it, because you had these previous highs right there in that trading range. Another rally there. Rejection off it, then a big green candle, breakout, a back test, and we went above it, but then we fell back down below. So I see enough reactions in there and down here to make that a target zone. Plus you have the 200-day moving averages, both the exponential and simple, coming in there as well. So very nice target zone, and I'm just going to measure it out for you. If that's hit, which I believe it will be, before the stock goes much higher. Especially if the broad market rolls over. Again, if the broad market doesn't roll over, this one could make another marginal new high. But if the market breaks down soon, which I'll get to in a second, then this has a very good chance of playing out. That's about a 17% or so drop, 16 to the first top of the target zone, 21 to the bottom of it. Next target, if and when that goes, which I still favor, 297. That's about a 36% drop. And ultimately, if we do get some traction on a sell-off, especially in the broad market and this stock, now you're looking at about a 56% drop right there. Let me see something here. I measured out. I thought I said this was 50 something. No, that was a 33% drop. Oh, that was the 50% drop there. And so I'm looking for something similar as well this time around. So nice RR. Again, TA 101 or Trading 101 says you don't short as you're coming up on support. They'll probably bounce it off there, most likely. And if not, whether they do or don't, the next break below there. So the objective short entries would be on a bounce off that level, maybe a 50% retracement, that first drop, something in there, 38% retracement, and or a break below 457. So there's CRWD and the weekly chart right here. You can see this one's been trading since 2019 when it came public. It's only put on the weekly chart one big divergent high comparable to this high right here. And that one, I'm going to measure it out for you again just to give you an idea. Oh, it's already measured. 69% drop. So see, this is where the weekly charts show. I've told you lately I've had these disappearing divergence lines on the RSI, but there it is, or the PPO. Nice wedge pattern, clean up trend line in which to short. And look at that, took out the two, and you see the 200-day moving averages on this weekly chart. They're the same thing as the 40-week simple and exponential. Exponential in red, simple in blue. And they do just, on most tech stocks and a lot of indexes, an excellent job of defining trends. And so there's an example where you took out both the uptrend line or the wedge, and then in one fell swoop, took out the 200s or the 40-week moving averages on this weekly chart. What do you do if you missed it? Well, you get a gift when you get a kickback to them, just like in the stock market. What we did earlier, this, in the last couple of big drops, when we went under the 200s, short the first rally back to the 200s, a rejection. Look at that, two beautiful rejections until the correction was over. 70% profit, or any part of that, you would have made, very nice quick profits on a short. And again, on the daily chart, there was positive divergence. Time to start covering up, and you had a trend line break. Says cover those shorts if you didn't already, and or get long. And then when you took back the 200s, guess what? That's very bullish. And then the 200s, you can see a perfect job of that red line, the 200 exponential or 40-week exponential here on this weekly chart, acting as support. buy, 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 buy. If you missed the breakout, you had multiple opportunities before it ran up. And then boom, what did it do? Took them right there. It was in a bear trend. Went all the way down to this longer term moving average I have here. So that's it, guys. So that's it in a nutshell. Looks very nice for a short on the weekly and the daily chart. Just give you levels on the daily, and you just need that next catalyst. And here's a longer term trend line it may pull back to ultimately before all said and done. All right, let's move a little faster. Let's go back to the other one, PANW, Palo Alto Networks. All right, so let's go back to the daily chart. Just start there. The letters aren't there. This was from a split, so I'm going to move that line back. Was that our uptrend line or divergence? Uptrend line right there, and you had a divergent high right there. Again, what happens in this particular platform when you split? See all my lines? They don't adjust. It's the my go-to charting platform. I use many, but for some reason they need to get with the times and make those adjustments on the trend lines when prices split. All right, so either way, you can see that was the last time we had a divergent high on the daily chart. That was followed by about a 36% drop. So that stock lost about a third of its value in short order. Oh, no, I'm sorry. That was the initial leg down. It kept dropping over the next almost a year, about 38% before all said and done. Next divergent high was right here, and it had about a 29% drop. And this is just simply the same thing. Consecutive series of divergences, been spanning for a long time. I know some of you are getting tired of hearing that. Divergences, doesn't matter. Market's going to go up. And it will till they finally play out. They don't always play out. All I can tell you is more often than not, they will manifest in the form of a trend reversal. And typically, the bigger they get, the bigger the drop. So when you see these divergences, and again, once again, let me reiterate, there's been many double-digit drops, well into the double digits, off those divergent highs. So it's not as if the previous divergences didn't work, but that one bigger divergence, again, when you see it like that on the, I'm just going to add it here on the previous, on the weekly right here, back there, that other drop. This is what it looks like. This is how we've been diverging on the weekly chart, setting the stage for a much, much bigger drop. And there's that uptrend line. So you already had, this one already broke down. It's been back testing the trend line from below, and right now it's riding up those beautiful 200-day moving averages, which again here on the weekly. And if that, look at that. I mean, yeah, it just never fails to amaze me how well these things act as defining on many, not all. You got to look at the stock. If it's going through there like a hot knife through butter, don't put too much emphasis on it. But when you see a stock that in a bull trend, when you're clearly trending, not correct, not choppy sideways periods, you're going to move through it. And that was it. You took it out right here. You took it out and you got rejected from below. These were all rejection candles. And that's when the correction ended. You took them back right there. Big breakout candle. And that was it. And you can simply buy every pullback to the 200s if you're trading it, however you're doing it. But we started to wobble here recently. We took them out there. I will give it points. We're back above it right now. We're right on the 200s. But again, we're also back testing, as I said, the trend line from below. So, and based on the scope of the divergences, I would say most likely this one will sooner than later. Now, if it wants to go up, sooner than later, drop and take out the 200 is what I meant to say. But if it wants to go up, sure, it can make another marginal new high. It's been doing it for a while. The market's been doing that. So those are your two time frames that I'm looking at. And you can see my targets right here. And let's just say if you want to keep it very simple, that's my current final target, 132, which from where we're at right now would be another 30% drop from what it's already done. All righty, let's go back to that thread. All right, covered those two. All right, this is a good, I was going to get to this anyways today. Gold, silver, the US dollar. Somebody asked my thoughts on silver and natural gas. So let me get to those two. I already gave you an update on natural gas. Let me do I'll give you UNG update today. Just to get that out to you quick this morning. This is NG, the bullish falling wedge I gave you last week right before I left, broke out. There's the breakout, first target hit. Now that should be support. It's not super well defined. You have nice support here too. You might consider a stop there, or if you want to go, I wouldn't allow for a back test of the wedge. It's too far down. It's going to have to drop a lot to get there. So that's an objective level. If you want a relatively tight stop, those are still my targets there. So looking good on natural gas. And then silver. Before we get to silver, let's talk about the dollar. I've covered many times in the past the correlation, or really technically speaking, an inverse correlation between gold and the US dollar. And it's silver just simply follows gold. What happens is gold will usually run in one direction or the other. It'll, bottom first, go up, and then silver plays a game of catch up. Gold will then often top first, and then silver. If silver's been lagging, it depends whatever direction. And that's what it's been doing lately. It had been lagging gold for a while until recently. Gold stalled out. But to me, it's all about the dollar. I've been covering that quite a bit lately, covering this basing pattern here, or trading range, I should say, not basing pattern, excuse me, on the weekly chart of UUP, the US dollar index ETF. And there's that. I'm waiting for that bullish crossover on the weekly. I've covered this before, but I'm going to hit it again one more time. If you follow the lineup, I'm showing you every low level bullish crossover. Low level means below the zero line on the PPO. Without fail, we had them here. And you see, do you want to be long or short the dollar? You can see we had, one there, yeah, and that's fine. Then rejection, and then the second one came here. So all these big trends, they were all followed a bullish, low-level bullish PPO crossover. We have one that's about to happen, hasn't happened yet. To see, you can put up the histogram, but I always say if you have to squint to see it, look, you can see these lines, and it appears imminent. The lines have curled up from very low, extreme levels, so really oversold levels, and we finally took out that trend line on Friday when I was gone. So that's the downtrend line that I said needed to go. That's the breakout in the dollar. This usually gives me a heads up on shorting gold, silver, especially if they don't get the memo right away, which quite often happens. Now, we did have a recent, actually I talked about it, wasn't a failed breakout because we never had a daily close. It was an intraday move above the trend line only to close back down below it. So on Friday, I'll zoom in quick, or really Thursday, right after I left, we've clearly broken out. It's nothing impulsive yet, but it's clearly 1, 2, 3. You can see that 3 daily candles above there. I already gave you my targets before. In fact, we already hit it once. I gave you this when we first hit that range. And that's still, it's a measured target for this wedge. Still my next target, $28. And somewhere along these lines, as I said before, it tends to be often incremental. The higher the dollar goes, sooner or later, gold and silver traders and GDX, they're going to get the memo that the dollar has now changed course and is rallying. And then that's still my second target, and we could easily go to the top of the range. I also like to watch the euro really closely because the euro is by far at 57.6% weighting, by far the largest component of the dollar index. And so it's pretty much the dollar in reverse when you put the chart up. And so you have this beautiful, with no violations, bearish rising wedge. And that was the measured target I gave you before. That is clearly broken down. Let me move my line here. It's not by huge margin, but we don't have to squint to see it. We're clearly below the trend line right now. So that looks good. And look, you can pure play it. You can short the euro, FXE. You can go long the dollar, UUP, or DX, or your dollar futures. If you trade current Forex, you already know that. But you can also just simply use gold, silver, GDX as a proxy. And so let's talk about those now. Oh, and the yen. And I'm going to get to the Japanese 40-year bond. I had at least one subscriber mentioning, and that's a big thing. It started to rock the markets recently when the Japanese 40-year long bond broke out the new highs. So if you look at it's USD, JPY, this is the second largest component of the dollar index. Everything else doesn't even matter, doesn't even move the needle. As I just said, the euro was 57.6%. The yen is 13.6%. So those two together make up about 2/3 or over 70% of the dollar index. So you really only have to watch these two. Now this is in reverse. The dollar is first, then the yen, and you can see here I don't have a strong opinion on this chart. We took out this trend line right here before. It was dollar falling, but lately we've been moving up, and now we've most recently taken out this uptrend line. So if the dollar climbs, especially if it could take that back, let's look at the Japanese 40-year bond, because that could certainly, and I think it will, if it continues to rise just like the US 30-year, our long bond, then that will almost certainly be a net negative for the stock market. Okay, this is it right here. This is when the markets started to wobble, when the 40-year Japanese bond broke out to new all-time highs. And you can clearly, and then they came in and intervened. They had a lot of intervention, BOJ, Bank of Japan, to intervene to bring it down. But market forces will ultimately prevail. And now we haven't yet taken out that previous high, but you can see this trajectory. It's climbing pretty sharply. So something to watch, along with the 30-year U.S. Treasury bond. And of course, that's going to have an impact on what the yen is doing against the dollar. So there, gave you the up. Oh, so let me get to silver more directly. Again, silver may have to get the memo first, and gold. This is what it looks like on SLV. Just big divergences building. Let me show you the weekly chart. So we go back. Back here, we had a parabolic blow off top in silver, followed by a correction. Again, this is SLV, the silver ETF. It was a multi-year, decade-long correction where silver prices fell 80%. You can see along the way we had nice rallies with divergent low, another divergent low there, and then finally that last big divergent low, which again, some of these lines have disappeared, need to be added back, but that's it. And you can see that was the lows in silver in 2020. Put in a divergent high right there, nice correction. Along the way, we had a divergent low to give us that rally, then that divergent low to give us this rally. But you can see here, we've been diverging, big divergence, just like we had back in, well, nope, that one was blow off top, no divergence. That's all I can tell you. Big negative divergence. There's your uptrend line on the weekly chart right there. And this is a big level, I think, 31.58, give or take. That breakout to new multi-year highs right there. So if that fails, we'll probably come back and check this, at minimum, check this long-term uptrend line off the 2020 lows, which would give us a drop of about 24% in silver. GDX, silver's down today. I think gold's down as well. GDX not getting the memo, but I've already given you some targets on GDX. Where are they? Somewhere here. Give you targets on the latest. I think I did. Maybe, oh, you know what is, I think it was on the 60-minute. This is a weekly chart. I've done some recent videos on the miners, and both GDX and the individual miners, so you can also reference that. On the 60-minute chart, what boards do I have to show you? Well, I keep talking about this trend line. Remember, we already hit this T1, T2 back here off that last divergent high, and I still have us coming down here to that T3 level there. But you can see this right here. This is the level it needs to give way. It's nice support. It was resistance, support. That lower line is about 50.39, I think. Let's just call it, yeah, 50.39 right there. I'll color it up for you. And, I'll even set a price alert on it just to make sure I'm aware when that one breaks. Set alert. And, of course, GDX will only go so far without gold and silver. So it will follow gold and silver in a multiple thereof. It's been in this trading range right here recently. So again, a break of that bottom range about 50.39. You can round it down to 50.35 or so if you want to be safe. So there's your update on the miners. Big divergent high right there. A lot like gold. Gold's just been dead money for a while. Gold's moving sideways. Put in couple divergent highs. Divergent high 1 corrected. Virtual equal, still divergent high. You can see the negative divergences. And gold's been a dead money trade since early April, moving sideways. So it's not going down and it's not going up. Okay, let's go back to the home page. That was those. Let's see, we have a couple things here. PEJ, click on that. Look at the comments here. Oh yeah, how about Bitcoin? There's a good one. So I just gave you the dollar, the outlook on the dollar, and a couple weeks back. Let's see, it was dated July 8th, no, a week ago. I gave you this chart, shared it, I think, in a video. I may have posted it live, a static chart. This is Bitcoin. GBTC was the first to market ETF-like instrument. Before the Bitcoin technical ETFs got approved, this is more like a closed-end fund. It was this one. So I have the history to go off of and chart it. That's why I use this one. It still trades. It still tracks, does a good job of tracking Bitcoin. And as you can show, the big trends. In green, it's the US dollar. And I showed you a very clear inverse correlations. Look for the big trends, look for the inflection points, not day to day. Sometimes there's disconnects for a little while, but you look for the major trends in the dollar. You can see the dollar was sinking here. Bitcoin was rocking. It was heading in the opposite direction. They both inflected right here. Dollar started to rally, and then shortly after, Bitcoin started to correct. Then you had a big rally here in the dollar, and you had the biggest drop in many, many years, if not in the history of Bitcoin right there. And that's unmistakable. You cannot argue these correlations. I'm not going to use the word immutable, but they're pretty solid. Again, you can look at my arrows, you can pause this video, and you can see. So what have we had recently? We've had a big drop in the dollar, and Bitcoin, Bitcoin's gone up a little since then, but for the most part, you can see that has stalled out. So if the dollar rallies, you would expect Bitcoin to come down. So there's your analysis on Bitcoin. On that reply there, I mentioned waiting for at least a half decent sell signal on Bitcoin. I watch Bitcoin futures, I watch spot Bitcoin, I watch IBIT, which is the Bitcoin, one of the bigger Bitcoin ETFs that came when they all got approved back in the beginning of 2024. I just read recently we had the biggest inflows into it. That's typically a contrarian sign. A lot of retail money chasing the rally right now, has broken out the new highs. And so there are, at this point in time, just because the dollar's going up doesn't mean, oh, go ahead and load up on a Bitcoin short. I'd like to see a half decent or better sell signal. Right now, I don't have any of that. We have a breakout to new highs. Again, if I'm right on the dollar call and the dollar continues up, again, the more it goes up, the more likely it is to impact it. And the whole fundamental reason behind that chart I just showed you here, the inverse correlation, just like gold, Bitcoin is priced, the Bitcoin you and I are buying, priced in US dollars. So if the dollar drops, it takes more dollars to buy one Bitcoin, right? It's very simple. And that's why the price will go up if you freeze supply and demand. Likewise, if the dollar rallies, it takes fewer dollars to buy Bitcoin. Okay, and let me just round out the video looking at the indexes and the the market leading stocks. This is, again, what I call my busy board for QQQ. I have a lot of lines, annotation, but the big things here, I give you some targets recently. And we did. On Friday, while I was gone, we did break down. It's not a screaming red candle, as I like to say. I like to see the redder the better, but we are below the trend line in QQQ right now, at least the one that I most recently gave you, and that is a sell signal. We're moving sideways since. S&P 500 SPY also broke down on Friday while I was out and remains below the trend line today. And then you look at the smallies. IWM is right on the line right now as I speak, coming up to resistance right there, poised to make a bearish PPO crossover. And that's the other thing. Oh yeah, let's look at QQQ and SPY. Like to see those bearish PPO crossovers to confirm. Want to see that MACD start to, or PPO start to turn back down. RSI as well, confirm the divergences. Same thing with SPY. So looks like we're ready to go. I told you on Thursday before I left town, because I would be away from my desk Friday, started to take some shorts again on the NQs, and now I'm waiting for this to happen. I'm going to go through the top components of the NASDAQ 100 and to increase the odds that we're going to break down here and go down. This is NVIDIA. Nice cleanup trend line you can see here. Trend line comes off the April lows, well defined, lots of reactions here. A beautiful bearish rising wedge, ripe for the picking, or ripe for breaking down. Just needs that sell signal, and then all the better. This is a big level. I should have it colored up about 152.30. That was the previous highs right there. We broke out. There's a breakout candle. There's a successful back test. So if that goes, then the breakout has failed. So sell signal 1, sell signal 2, and that's NVIDIA. Microsoft needs to break that trend line. We're right on it. So far you have the 2 top biggest components. I'm doing it in order of market cap. NVIDIA being the only 4 trillion company ever. Still 4.0 trillion today, according to my charting platform here. Microsoft second largest at 3.7. Needs to break that trend line. There's Apple. Apple's just been kind of lagging behind everyone lately, just kind of dead money because they kind of got behind in the AI race. At least that's the way the market's treating them. Amazon has that beautiful back test. This is that purple line, is the primary uptrend line off the 2023 lows right there, as I've covered. So you have, oops, that's not the line I wanted. This is my line tool. And it gives you this little wedge. So as you broke down here, we've been back testing, and Amazon just needs to break this trend line. Like I said, again, the more the better. If just NVIDIA breaks down, sure, that's going to be significant. But it doesn't necessarily mean everything's going to fall. The market's going to top, because it could be a false breakdown. They could just gobble it back up, put it right back above the trend line. If NVIDIA, Microsoft, and Amazon all break these trend lines, and again, the further they get away from them, then they break the next support levels. Those are what I just call check marks. Check marks. Right now, we don't have that. We're still in this uptrend, and so no reason to add or get aggressively short at this point in time. But if and when those go, then I think there would be. There's Alphabet, big divergent high, potential head and shoulders pattern, as I talked about, with a left shoulder ahead, right shoulder looks something like this. Left shoulder, head. I'm zoomed in here, and it needs to form. We need to reverse soon. We need to reverse off this divergent high, and we need to do it soon to keep the symmetry of that pattern going. That's, again, if you just see it again. So it's only what I call a potential, not a fully formed head and shoulders pattern with a left shoulder, head, right shoulder, and this is what we call our neckline right here. So we need to see it drop, and we need to see it on increasing volume. That's one thing a lot of folks don't, they forget to, or aren't aware. You want to see increased volume on the formation off the head and off the right shoulder. Doesn't matter here on the left shoulder, increased volume. And you did see that here on the off the head. All right, a couple more. Meta, trend line there. It's a price channel. Needs to break that price channel. Broadcom, I gave this one as a trade idea with a suggested stop on a daily close above 270, but I still like it. I still, it's up to you. Volume is tapered off. It took out that stop on virtually no volume. Again, a lot of things are just drifting up on virtual no volume because the sellers have given up. Short interest has dropped way down to levels. So I think when we get the sell signals, again, a flurry, a high probability, enough check marks, I think it'll be a pretty swift rush for the exits. I think we can head down pretty quick to these targets. So, what this one needs to do, well, first of all, it needs to fall back down below this level here. But, if you're given a little room, and the stop was a relatively tight stop based on the earlier targets. If you shorted it base and you're holding out for T8, you're well within a reasonable stop parameter, using a favorable risk-reward ratio. Tesla needs to take this trend line right here. It already put in that divergent high, but it's holding above this uptrend line right there. And then Netflix already broke down right here from this uptrend line, little wedge type pattern, coming off that big divergent high. And that's about it. Let me stop here. So that's it, guys. Today's a go nowhere day. Tomorrow we have some stuff on the economic calendar. Remember, you can access that. Click on resources here in the top menu of the site. Go down tools of the trade. I use this all the time. Click on economic calendar. You'll see tomorrow you have CPI, Empire State Manufacturing. Those could move the market. Then PPI on Wednesday. Industrial production on Wednesday at 9:15. Most reports come out at 8:30, but some of those are after or right before or right after the market opens. And then jobless claims and retail sales. So you can see all the things on the calendar this week. And that's it. I'm going to wrap it up here. If you have any questions, you want an opinion on anything on the site or anything new, let me know, and I'll try to get back to you as soon as possible. This has been Randy Finney with Right Side of the Chart. Have a great day.